What's up, guys? It's your Money Cat. I hope all of you had a good week. There's no webcam today because I'm not feeling too well right now, so I apologize. Hopefully, over the next few days, I can recover, feel better, and healthier so I can come back with more videos for you guys. Today marks the episode number 4 for my long term retirement account. Currently, we're sitting at around 31, 32K range. This week was kind of a low key, kind of taking a breather kind of week for my portfolio. I did not deposit any money, and my account overall actually went down a little bit, which makes sense because overall the market closed for in the negatives for the week as well. So we're going to take a look at the 4 stocks that I'm holding in this portfolio, and we're going to look at the charts for technical analysis and talk about where those could be headed. Like I said, there hasn't been any change in these holdings, but all 4 of these stocks went down from last week. Looking at Tesla on 180 days 4-hour time frame chart, we hit the high of 884 and 89 cents. And during that time, we were on this very steep local uptrend line. But as we entered a little bit of consolidation period here, that trend has been broken. So now we're looking at possible support from this yellow line, which is the 50-day moving average. As you can see, price has been supported and riding above this yellow line ever since all the way back here when the current trend started. So we're currently testing the 50-day moving average right now. Also, as a support, we do have this red trend line that I've drawn in. It follows pretty closely to that 50-day moving average that I mentioned. Since they're so close together, I think you can treat these two different things as one level of support and kind of look at it as more of a small range right here rather than a definitive point. You'll notice that both the RSI and MACD have gone down significantly while the price has consolidated horizontally. So yes, it's a little bit lower than the all-time high, but I wouldn't necessarily say that the price has gone down unless next week we see a break to the downside of the support levels here between this trend line and 50-day moving average. However, as both RSI and MACD cool down, that could also provide us with a potential entry point for Tesla. I know it's been very difficult to find a good entry point for Tesla because it has been just going up, 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 and up. But I think this little consolidation and potential break to the downside of the current trend that we're on, I think this could provide another good opportunity for an entry. If Tesla breaks to the downside, I think the next level of support will be somewhere between 680 and 700. That range has been previous resistance back here, as well as that is near where the most recent uptrend has started. So previous resistance becomes previous resistance now becomes new support. Also, we have this green line 180-day moving average coming up from the below. I think by the time Tesla goes down, this line would have caught up and meet the price around this level, which will provide another layer of support. Next, looking at Apple on 180 days 4-hour time frame chart. Unfortunately, the trend was broken and it looks like Apple is headed to the downside for the time being. The big tech companies have been feeling the pressure, especially since the Democrats have won the majority. There's been talks that they'll go after the big companies to try to break up their powers. We've definitely broken below this upward trend line, so now we're testing support right around here, somewhere between this yellow line and this red horizontal line, along with this green 180 days moving average. We'll see what happens when the market opens tomorrow, but right now, best case scenario looks like just a more horizontal consolidation. If we fall farther below from here and break this local support, then we have a very large range for where Apple has been trading horizontally. So there could potentially be a big drop off. I think there's some support around 120 as marked by being previous resistance here and turning into a support. So it'll once again be testing it as support coming from the top side. Also to note, we have earnings report expected by Apple on January 27th as well. So again, that'll be a key date to help us figure out where Apple could go next. I think for short term, you're slightly worried about Apple as there's clearly more downward momentum right now, and support looks like it's being tested, but it looks pretty weak. However, there's a reason why I'm holding stock like Apple in my long-term account, because no matter what it does in the short term, it can go down, up, whatever. I'm looking at this at least 5 years out, and I'm still very extremely confident that in 5 years, this range that we're trading right now will be in our hindsight. Shifting our attention to Amazon, Amazon has been king of horizontal channeling. As you can see, all the way from back here, we've been basically trading between this range, which is around 2950 or so, to the top side of 3500. Now, the range has been narrowing down slightly, almost like in a symmetrical wedge pattern. So there could be a potential breakout point either to the upside or downside coming up. And maybe, just maybe, earnings report by Amazon, which is expected on January 28th, that could be the breaking point to where we can see whether this symmetrical wedge pattern will break to the downside or break to the upside. But similar to Apple, I bought it with 5-year vision. And again, I'm supremely confident that in 5 years, this trading range that we're in right now will be in our hindsight for Amazon. Finally, AMD. AMD started this year off strong, hitting the all-time high of $99.23. But since that, we have been in a big decline. This was further driven by news of Intel hiring a new CEO, and many people view that as a positive catalyst for Intel, which translated to more competition for AMD and more headwind for AMD. So this current downslide actually puts AMD in a little bit of precarious position. First, it broke below the trend line that I've drawn in. Now, it's kind of hard to call it a trend line because it's only defended it as support just one time. The trend line began right here 6 months ago at the low of $48, and it defended successfully one time here, and this was the second time it was really challenging. But that's also because AMD has been up a lot, and it just never had the opportunity to come close to this trend line. So even taking into account that resistances and supports are more of a range than a single point, I think it's safe to say that this trend line, at least for the time being, has been negated. However, there's one more support level that is still being tested, and that's around, I would say, 86 to 88 range. And that is marked roughly by this red horizontal line right here. As you can see, this level worked as resistance many times before. And yes, there have been moments where price kind of peeked its head above, but I think generally it's safe to say this was a very strong resistance level. So this would be our first line of defense, this horizontal support level. But if we are beat there, then we have all this range to go down. So the next level of support likely will come around high 70s, which is marked by this level. If you look at the RSI, it is now in the oversold section at 29.32. So I think we might see a small bounce off of this first line of defense at $86 to $88, but it might not signal a trend reversal. As you can see, previous times where the RSI was in the oversold region, right here, the price did bounce a little bit, but ultimately it went down farther. At this point, Again, the price looked like it was bouncing, consolidated, but it fell further. If we look at the MACD, it looks like the gap is actually widening between the blue line and the white line. So at least for the time being, it looks like the momentum is still on the negative side. I still think AMD's trajectory is up after all is said and done. The current downward slide is nothing because of what AMD did poorly. AMD is still executing very, very well. They're continuing to grow at a rapid pace. They're reporting earnings on January 26th, so we'll find out about their performance and their numbers, but they've been absolutely stellar. So it's nothing that they did wrong. It's just I think people are getting their hopes up with this new CEO from Intel. And I think that's a very important distinction. When AMD was rising and Intel was falling last year or two, that was because AMD was performing well, but also because Intel was executing poorly. That is not the case this time. AMD is still performing at a very superior level. It's just that Intel has been in the dumpsters recently, so people are getting their hopes up with this new CEO. I think around this first line of defense, it could be an interesting point to enter for short term, but for me personally, I will be skipping over that. However, if AMD were to fall down even more, I think anywhere below 80 will be a pretty exciting level to enter AMD, because that would be about, at $80, that would be about $20 off of all-time high. And even better if it's closer to this secondary line of support around $74. That is only if these results happen before the earnings. If AMD falls even more because of earnings report, then we would have to look at the earnings report, what happened, what exactly went wrong, and we would have to kind of rethink about our position. But assuming the earnings will be great again, between $74 to $80 range, I think one could get very, very excited about entering into AMD, as that is at least 20% off all-time high for AMD. Thank you so much for watching, guys. Again, I apologize for not having the webcam. Hopefully I'll feel better, and I will come back with more energy and with more stock videos for you guys. So with that said, I am your Money Cat. See you next time.